Good weekend. Ira Epstein, and here we are with your financial market wrap-up, and this is your weekend edition, and this is Friday, the 29th of November. This was the last trading day of the month, 2024, and it's Black Friday, it's all these other things, football day all over the place. But if you take a look, we had abbreviated trading sessions today, but all the markets took off to the upside here. Most metal markets were higher as well. As you could see, copper still having its own share of problems. Dollar down slightly, number of currencies were up. In the energy markets, they started off on a good note, and as the day went on, they just keep warring themselves to the downside, and the reason probably something to do with OPEC. OPEC pushed back its meeting. I now understand it's going to be Thursday. That could change again, but that's what they've done. They were supposed to have it now. Natural gas, still the cold weather, giving it a kickaroo, but you were down in the heating oil. So I happen to think these two markets, number one, I think you're getting oversold here, and I think you're getting overbought there. That's the interesting part. Bonds and notes all rallied. Now, before we go into the individual charts and look at how the weekly charts have done and everything, this is Cyber Week as far as I'm concerned. So, with that in mind, from now until the end of this coming week, 50% off any one-year subscription. The sale is open to new and returning subscribers. It's the complete futures, the combo package, the Spider ETF, your choice of what you'd want, or the futures video. Now, when you go to the website, and the link's up here, but it's iraepstein.com under research, and you take a look at the pricing, when you do that, you'll see, it says 14% this. Just choose the one that you want, put it in the cart. When you go to pay for it, you're going to see you get off the stated price 50% off for a one-year subscription. We couldn't make it any easier than that. There's a toggle switch that you look at. Everything's defaulted to 1 month. You've got to go to the 1 year, so just hit the toggle. You're used to it on other websites. You click it, the 1 years will come up. Put that in your cart. When you go to pay, 50% off will arrive. So hope you take advantage of it. It's my big one. It lasts for a week, and we get a lot of people that want to do it at this point. Now, in terms of news, S&P Global Group is going to release their U.S. final November manufacturing sector PMI, and that'll come out at 8:45. And again, that's the final one. Then we have the ISM. They're going to release their November manufacturing sector indices, and that'll come out at 9 in the morning Monday. Construction spending for October. It's always further behind, and that'll come out. It's 4 weeks old. That'll come out at 9 o'clock. In New York, Fed President Williams will speak at the Queen's Chamber of Commerce in the afternoon on Monday. But now we have to deal with what is next in these markets, and that's where we're at. And I know we've gone up, but I give you fair warning. If you're a student, as I am, of history and what the market does, yes, I firmly believe, and I've been saying it for months to you, you will get that Santa Claus rally. I believe that. Can I guarantee it? Of course not. But this coming up is the week where the market often does this. You start off on a good note, and then you'll flub-a-dub, as I call it, and the markets like to drop back a little. Do they have to? No, but they often do. And then you kick in, and I'm not going to give you the date here, but you kick in to take off. So far, I think you'd agree. My analysis on the S&P has proven pretty darn good. You bottomed out November 19th, and you've certainly taken off in the market. When we look at the S&P, as you can see on a monthly chart, we just finished out an all-time high close. So let's applaud it. That is important. When you come to the weekly chart, an all-time high close as well. And we're coming in now on that 6,100 zone. When we look at the chart action on a weekly bar chart, we get to see that you have higher lows, higher highs. The swing line's right here at the 58, 55 level. That's the number I wouldn't want to see taken out. Otherwise, you start losing that bullishness that you have and have to rebuild that. In terms of the correction times, well, you couldn't make it to the 18-week average and you've gone up and make new highs. So that means this is no longer a target necessarily of any type. Now the question is, what is the target? It's here. It's the upper Bollinger Band. It's currently 61.47. It'll probably be up a bit from that when we reopen on Sunday night. And you have the fully embedded reading. Now this to me is the all-important thing. When you lock in those embedded readings, market often goes with it. The market likes to buck against when that occurs, a Bollinger Band top, back away, and there's a way to come in. If you've taken my enhanced Bollinger Band course, you learn that in the procedures that I go with it. In the Dow, same darn thing. You can see how the markets come up and run away to the upside. Another new all-time high, but you don't buy Bollinger Bands. And the reason you don't buy a Bollinger Band, you only stay over them 5% of the time. You can run them and push them out. But buying over them, it's just a question of when they're going to give you that correction against it. It's not the smartest thing that I've learned to do. Higher lows, higher highs than the NASDAQ, not as strong as the other markets right now. They're making all-time highs. You're not right here. And you are coming up for the all-time high in the Russell. So it's joined the parade too. The market is not yet embedded. It's overbought. We then take a look at the 5-year notes. You have an oversold market that went to the lower band. Again, I keep teaching you about that. Ready for a bounce. The resistance begins at the 100-week moving average of closes and then moves to the 18-week. In order to negate the downtrend, you have to take out 112.22. You'd have to take out the same thing in the 10-year note, as you can see here. In the dollar index, the market got over the upper band. I think it's ready to pull back a little bit. I'm not saying the uptrend is over. I would like to see if the market's going to continue to get the 18-week average over the 100. Haven't done that yet. Then you'd have the shortest term average over the medium term, the 100-week average, and the 100's well over the 200. But if you start dropping with that momentum and lose it right here, you can correct into that for whatever reason. But that wouldn't surprise me. The euro got under the Bollinger Band for 2 weeks, and now it's popping up. I see a lot of resistance up here, and it's the flip-flop of the dollar. It looks to me like it's ready to springboard a little bit. The Canadian dollar still has problems, but keep your eye. If this week's high is taken out, right through here, which was 71.85, you have an outside week down, and if you take that out, often markets try to rally to the closest moving average before they continue on and go for those lows again, if they're going to go for them. You've ridden the Bollinger Band down, you're oversold, you're not embedded, you could get that kind of action for no reason. In Japan, we're going to get an awful lot of inflation numbers early in the week. So you want to be attuned to that because that sets up what the Bank of Japan might do. They're trying to lock in inflation, as you know. That has been their goal for a decade plus. And you are looking at the market coming alive here. You have room to run. I wouldn't want to sell the market in an oversold condition down there. Bitcoin, now you're getting traders giving you new breakout numbers. 103,500 is what some chartists think is the new number. If it gets up there, then it starts another launch to the upside. I frankly don't know how they came to that number, but they did. We'll see. The market's now got a couple of weeks over the upper band. It generally doesn't stay over it more than 5. So we've already got 3 of that. We'll see what happens. In the Brent versus WTI crude, you can see how the market keeps hugging the 18-week average of differences, and it spreads out. Well, that means that the Brent's a bit stronger in difference as that moves out than the WTI, but we're going to have to move all that around anyways. Now, on the weekly charts, you're coming up to the resistance point. You bucked up there this week and you didn't do anything with it. If the market wants to nosedive here, the next objective in the Brent is 69.20, and that's from here about $3 lower. WTI, the same thing. If it wants to drop down, now 65.35. Trends are down until you take out 3 weeks ago's highs in both of these markets, so pay attention to those. I don't see a trend in gasoline. I see a market that's doing this right now, getting itself oversold and just sort of marching around right there. So if you put it all together, you're trying to come to figure out what to do next, well, I can tell you. You've got the opportunity here, if you're a believer in the things that I talk about, 50% off for a year. It gets very inexpensive at that price. Again, remember, it's iraepstein.com under the word research. You can move up here. There'll be an icon. You put whatever you want into your cart. You will see the new pricing then shows up, and it will be 50 off on anything for a 1-year subscription. Again, this is open to new or returning subscribers. I'm Ira Epstein. You have yourself a great weekend. I'll catch up with everybody Monday morning. You take care.